with AI-based music.
You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
All right, traders, good morning and welcome to Quasar Markets Live. After a 3-day slide, we're getting a little bit of a rebound attempt. Tech is popping, crypto finally bouncing, and the VIX is backing off a little bit here. So it is a little bit of a breather day so far. Taking a quick look here, we can see the Dow Jones, which has had a pretty solid week, had a strong much stronger than the other two indices, up about 57 basis points, and it's actually up about 32 basis points on the week. S&P up 61 basis points this morning, but down 1.87% on the week. So still weak there, weak on the month, down about 1.8%. And year to date, down about a half a percentage point, a little bit more than that, actually, the S&P. So, you know, is it just a quick relief pop here, or do we have some strength? Can we get some movement on the upside today? And lastly, tech, which we know has been really under pressure over the last several sessions, up about 74 basis points. So leading the way, tech rebound leading the way, but again, down 4.5% over the week, about 4% for the month, and down about still 2.5% year to date. So that's where we stand on the indices. The VIX back down at 20. I'd say back down because it popped up to 23 and change yesterday, but still elevated. So it does show us that, you know, while things are moving in the right direction, folks are still using a hedge. And that's the right way to do it, right? So that's what we always say, have some protection, have some hedge, and folks are hedging for the volatility, whether it be out of the Middle East, whether it be out of the White House, or whether it be out of earnings reports. You know, any of those right now are the main drivers we see. I did mention yields are still fairly firm here. The 10-year sitting right around 4.2 and the 30-year around 4.858, so not at the higher elevated levels we saw last week and the earlier this week, but still elevated there. And we do see the DXY back below 98 here after touching that level overnight, down at 97.73. But again, it has been on a really nice run over the last several days. Gold also up about 3% overnight here at 49.24. Looks like it wants to try to make a run back up to that $5,000 mark. And silver, catching a nice rebound after falling below 70 all the way down to 64.10. It has recovered somewhat, and we are back at near highs of the session towards 75.70 right now. Oil has gone up slightly after the U.S. did issue a warning to Americans in Iran to leave. So that's never a good sign there. And that does have oil and geopolitical tensions a little bit up this morning, except that they are meeting, I believe, now in Oman. I haven't really seen anything on the tweet deck. It says U.S.-Iran talks over for now. Okay, just literally broke on my Twitter there. So, you know, that's moving there. Bitcoin, whoa, what a bloodbath yesterday, but what a rebound. This is the type of 10% rebound we look at from the bottoms to the start of a solid recovery. I don't call bottoms and tops, but I do feel that this is definitely it's hitting the characteristics we want to see on a recovery. I do think it's a tactical bottom for right now, for sure. And, you know, probably on our way, we need to see our ways, work our way back up towards that 70 area. Actually, we go to this crypto chart. And you can see here, you sort of got your lines. We're right at the first form of recovery, which is called the shallow retracement on the Fibonacci level here, right at that spot right now, 67,200. And we really want to see a recovery over yesterday's starting point right around that 73. If we can see that kind of reversion trade to the upside, you know, you really can tell that we're back. But cautiously optimistic on crypto right now on my side. Doesn't mean we're out of it and we go straight into a bull market. Bear markets have a way of sticking around, but some of the best relief rallies you do see are during a bear market. So keep an eye there. What is also nice so far is we have some breadth to this also. It's not just the Mag 7 pushing it up. In fact, when we get to the Mag 7, they're underperforming the rest of the market today, or most of them are. And we see about 25.54 on advanced decline. And again, advanced decline tells us our stocks, more stocks opening green than red, and they are. And good morning there, Ida. I hope you are having a great start to your day out there on the West Coast, I know. And Tick's been pretty steadily positive most of the day. So far, you know, but very, very early into the trading day, in the pre-market here, things are looking up. All it will take is one or two negative tweets to see the opposite type of thing go. We'll say most of the beta names, starting with crypto, moving to the upside. In the gainers, you also see a lot of names like ASTS up 4%, FLY up about 3.4%. All of the crypto adjacent names, Galaxy Digital up almost 10%, BitDeer, the mining company, up about 8%, Mara up about 9%. And again, we have this across most of the crypto adjacent names. Also, the very risk-on names, plays like ONDS, which is a defense and telecommunication company, up about 3.5%. Coinbase, nice move up here. MSTR up almost 10% here today after their earnings yesterday. So even with a $24 billion loss on their Bitcoin, unrealized loss on their holdings over the last quarter, we see folks not scared. MSTR actually catching a bid here. So nice little move to the upside, up about 10%. I said the Mag 7 is underperforming. We do see a few of them are in the green, but there are a bunch in the red. And Amazon is the one we have to start here. Down almost 14% in the last two trading sessions. It hit with a number that, again, you know, yesterday I told you I was blown away by the $185 billion that Google was spending. We see today $200 billion in CapEx out of Amazon in 2026. So we continue to see stress there. And that is definitely stressing the markets. And they actually had a small EPS miss by a couple of pennies. They were slated to come in at $1.97, or estimates came in at $1.97. They reported $1.95. They did have a top line revenue beat, but this has definitely, you know, has them under pressure without doubt. You know, that CapEx shock, margin risk, return on investment uncertainty, all wearing with it. And if you layer that on top of the broader Mag 7 AI infrastructure spend debate, are we building too much too fast? When CapEx ramps faster than revenue visibility, you get multiple compressions like this. So that's what we're seeing so far. Thank you, everybody, for joining us this morning at Quasar. Do me a favor, hit the like button, share button, all those things. Help us start to get into the algorithm there, reach more retail traders. We would love that. So looking at the Mag 7, as I said, NVIDIA, nice bounce back today, up about little over 3%, erasing yesterday's losses. But again, this one is down, 10% on the week and 9.5% year to date. So NVIDIA catching a little bit of wins here. Microsoft, which really had been beaten down again, same type of situation here, up 1.5%. But that really doesn't erase the fact that they're down 17% for the month and almost 19% year to date. Google down another 1% here. They, again, after their earnings yesterday, they rebounded. They did go positive at one point, but still facing pressure. They're down about 2.5% for the week. So Mag 7 not looking so strong. Apple also down slightly here in the pre-market. They are with the one that sort of bucks the trend, and I believe Netflix is going to too when we get to that. They're up about 7% on the week, and they are up about 1.5% so far this year. Meta at 669 here, just down slightly. This is another one that I think we're going to see over the year. Yeah, it's up for the year to date, down almost 10% on the week. Tesla seeing a little bit of a bounce back here, up 1.17%, but another one that year to date's down almost 13.5%. And Netflix, still the merger and acquisition talk is what's keeping that one sort of stuck where it is down about 14% year to date. So Mag 7 definitely underperforming the market. We do see some solid movement or some solid strength or breadth across the rest of the market. So we do see that working out. What we still see also is the software route in play here. It got hit hard again. That AI disruption narrative really hitting. I actually have in my gainers, I think, right here. IGF, which tracks the software tech industry, down yesterday 5%. It is bouncing back slightly, but again, this is one that's down 23% over the month and down 25% year to date. So software has definitely been the soft underbelly of the market. The market is pricing a world where AI agents compress pricing power across SaaS, software as a service. As I said, IGF has just been getting crushed on a multi-day slide. Its worst weekly drop since the financial crisis era. Language is back in the high headlines. You know what I mean? So it's all been about this AI tooling acceleration. Anthropic had more headlines. They were the ones that sort of started this thing. They added another layer or put another log on the fire. This morning, the announcement that Goldman Sachs is partnering with Anthropic to build out AI agents through their processes of accounting and compliance. So if you work in those two fields, you better, or you really want to make sure that you are learning, you are what they can't replace. You are the person who knows how to use the AI, how to get the most out of it, that you're taking courses that they offer it, because this is happening quickly. That doesn't just affect the software companies and their moat, because I do think we'll see integrations and we'll start to hear announcements that these software companies, that something like Oracle is partnering with an Anthropic, with a Chat GPT, with a Gemini on utilizing AI to improve their software products. Where it is going to hurt, it absolutely is in the labor market. We've seen it already talked about, and I think you'll see that too get exasperated. I'll bring that up when BigBeat comes in at 9 and see what he thinks there. We do have some earnings winners and losers. Molina Healthcare, one of the bigger laggards here this morning, down almost 31% here. The managed care company reported a quarterly loss. Surprise quarterly loss, and issued dismal guidance for their current fiscal year. Some of the things they pointed out was a loss of $2.75 a share on revenue of $11.4 billion. So again, the street thought we'd see a little bit of a profit there at 34 cents. So very not happy with that. Full year guidance is likely to provide even a bigger disappointment for investors. It issued an outlook of $5 per share for the entire year, where estimates were looking at or trying to get to that $13.25 area. Company cited the implementation of a new Medicaid contract and the underperformance in the Medicare Advantage Part D product as the key reasons for poor guidance. We know health insurers have fared very poorly since late January, when the Trump administration proposed keeping Medicare rates roughly flat next year, up less than 1 percentage point, and well under what analysts thought. Shares of its peer Centene, CNC, are also down about 5%. And United Health, another insurer that's been under pressure most of the year, down about 2.5% this morning. Also, although it's recovered, it looks like a little bit, only down 1.21%. So it is bouncing back a little bit, but definitely stress on that sector. Healthcare has had a rough year, probably, right? Staying in that side, another company getting hit pretty hard is Hims and Hers. Down about 7.2% here after having, again, a week a week go of it this week. And I know I heard a couple of people who said they were, trying to catch a knife here, down about 19% for the week, down 34% on the month. This was after the FDA suggested the agency might not let them continue to sell a cheap copycat of Novo's Wegovy. So that is definitely going to be a problem for them. The FDA said it will take swift action against companies mass marketing illegal copycat drugs, claiming they are similar to FDA-approved products. FDA Commissioner Makary said on social media. So shares in them went down. Novo Nordisk has rallied on this. So NVO, that had been hit pretty hard and whose CEO did not have very glowing comments after their earnings, up about 7.52%. Eli Lilly, of course, the makers of Zepbound. Whoops, I did that too quick. Also up about 3.75. They had strong earnings and had been moving up prior to that also. I mentioned Bitcoin's big jump back up. That does have the crypto adjacent names moving a little bit to the upside here. And one of the bigger movers today is MSTR on the back of its earnings. As I mentioned, they did post a fourth quarter loss in the vicinity of, 24 billion due to the unrealized loss on its Bitcoin holdings. But markets don't care. Traders don't care. The fact that they didn't say they had to sell, which we already knew they probably would not. And has it bouncing back with crypto today. So both are moving up in tandem. I mentioned earlier also that the crypto mining names catching a lot of wins. And hey there, Zora, how are you? Names like BitDeer up 9%, Mara up almost 10% here. Hut. So all the crypto mining names. It also has names like Robinhood, HOOD, up about 6% here. Coinbase up about 6.5%. And Galaxy Digital, which falls in sort of that super app play, up 11.5%. So crypto adjacent names catching winds for sure so far today. We do have some earnings today, not a huge amount. Under Armour, one of my companies I always keep an eye on just because if you live in the DC area and you were in the restaurant business, you know Mr. Plank pretty well. Nice guy, the CEO and founder. I don't think he's the CEO anymore, the founder of Under Armour. But they're up about 3% here after having a nice earnings. Their quarter 3 revenue did fall 5%, but their adjusted EPS of 9 cents and gross margin of 44.4% has them moving up so far on their earnings. Other earnings, not really much to keep an eye on here. Yeah, not much else on that I'm really looking at here. The other big story still continues to be silver and gold. Both are bouncing back nicely. Silver doing its, I said when it was going down, it was doing its crypto impersonation. It continues to do its crypto impersonation, jumping up from a low of about $64 overnight, now pushing up towards that 75.40 area. Gold's trying to get back up to that $5,000 level, also at 49.25 right now, up about 3% also. So the hedges are getting some love today, but again, so is tech. When all these things that kind of don't correlate move up together, I get a little weary in the pre-market which of them will give, because something usually does, right? But we could just have, everything was beaten up so badly. Now it's that. I haven't looked too much cyclically at the sectors. Let's take a quick look here. Not surprising that energy or technology rather, is leading the way, up 1.86% by the S&P. Material sector up almost a full percentage point also. And then we see industrials and healthcare moving to the upside. Financials also up pretty nicely so far, utilities and energy. So the only things that are laggards so far is consumer discretionary is down about 1.16%. And we do see that consumer staples is down slightly, but we know consumer staples has really been moving on the upside lately, not the downside. So that's a little bit of just a probable rotation type play. Other morning laggards we haven't really hit on so far. Humana, HUM, also down about 2.72% here. Part of that healthcare getting dragged it down with Molina. Same thing, solar, which had a strong day yesterday. FSLR down about 2.9% here today. Philip Morris, so we mentioned consumer non-durables. We're under a little bit of pressure. This is more of a secular rotation. These things have been moving up really nicely over the last few weeks. So Philip Morris, Hershey, some of those plays that are unwinding a little bit here. Verizon, AT&T, same type of thing there. Colgate, Palmolive. Those are most of the laggards. Same thing, transportation, Norfolk Southern, down a little bit. We'll say while most of the crypto miners are moving up after weak earnings, Iron Limited, is down here about 1.5%. So continuing to move to the downside after less than expected earnings. We did see on the other side of the energy sectors, it's still moving to the upside. Bloom Energy up about 13% this morning. Their quarter 4 revenue hit $777 million, up 35.9% versus a year ago. Their full year revenue reached $2 billion, and they're forecasting in 2026 for about 3.1 to 3.3 billion. So nice move up by Bloom Energy here. Another earnings play so far today, Coty, COTY, the beauty. Whoops, I hit the wrong thing there. down about 14% after the cosmetics company missed analyst targets for its fiscal second quarter and yanked its fiscal year guidance, citing problems in the beauty market and leadership transition. This could hurt Sephora, could hurt Five Below, some other names in sympathy there. You probably want to take a look at. Sticking on earnings, one of the better earnings last night, and in this sector that has not seen much strength, FTNT, Fortinet, up about 3% here last night after the cybersecurity provider beat estimates for earnings, revenue, and billings. They did issue solid guidance also. So it looks like you could maybe see them avoid maybe the worst of this brutal tech sell-off. It is trading at less than 27 times its expected earnings, making it a lot cheaper than other cybersecurity names like Palantir that we know is up in the 200 range there. Another one that sort of surprised me, I kind of thought it had fallen off, but Reddit, nice earnings, gained about 8%, now still up 7% after the social media company reported better than expected results. They reported adjusted earnings of $1.24 a share, had revenue just above $725 million. So nice little beat on both EPS and top line revenue. Like other online platforms, Reddit makes mostly all of its revenue from advertising, and that average revenue for the quarter came in right around $690 million. Again, beat estimates and grew 75% from the prior year. So good to see that. Their new CFO did say it was a strong finish to a standout year. They also reported fourth quarter global daily active users at about 121 million, up 19% from a year prior. So again, surprised me a little bit, but all the metrics coming in pretty strong on Reddit, and that does have them up almost 7% in pre-market trading so far. As we are almost at the top of the hour, we do see Qs moving a little bit to the downside here after topping off right about that 24,875 area, falling back towards 24,800 or so. S&P through the SPY is up about 55 basis points and right around towards the highs it's seen. And we know that the Dow, which had been the leader, is up about 52 basis points. So we do see all three indices still moving positively. We see the VIX down about 7%, but still relatively elevated at $20. What we would call the risk-off assets, gold, silver, copper, Bitcoin, oil, most of them are moving up, although oil now moving down. So maybe news out of, we're starting to see some things. Iran foreign minister negotiators will return to capitals for consultations. Talks will continue. So that could start to get things moving there. Market WTI, that's a pretty big move. It was down, it was up pretty big in the pre-market. So as you can see, that news has a move from 63.43 down to 62.14 and moving to the downside still here. So that's there. Another one that I am not a huge fan of, Roblox. Strong earnings, has them up about 9% here this morning. Video game company reported a narrower fourth quarter loss than analysts were expecting. And their revenue said that their revenue will rise by about 25 to 29% this year. So that does have them moving. We've just hit the top of the hour. Let's run his intro and get him in here. The big man himself, BigBeat.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
Good morning, Big Beat. How is your Friday starting off, my man?
Excellent. I bought that dip on Bitcoin. There we go. 63.8 yesterday. I got a little nervous. I'm under 60, but I wasn't too worried. I mean, look, I get it. Again, what's missing in the markets? Common freaking sense. Like, don't be over levered. I think we talk about this all the time. And the leverage just got removed yesterday. And we now know that there were some over leveraged positions by some whales out there in crypto, and they got.
We don't now know. I've been yelling at you for.
No, I mean, a lot of people say that now, but we now know is that they've been kicked out of the markets.
Yeah, it's still a little heavy on Ethereum, so we got to be careful there. But Bitcoin looking better than Ethereum. 10%
Three whales got liquidated yesterday. Three.
Yeah, wow. A bunch. Yeah, more than that will come out. Yeah.
Well, we know right now. So yeah. It was. Yeah. It definitely. How does an employee of BitThumb send out 2,000 Bitcoin to their employees and make that mistake? Like, come on! Like, this is not.
How can I not get one? And for those that don't know, what Steve's talking about is one of the largest exchanges in South Korea. BitThumb sent out erroneously 2,000 Bitcoin, which were then immediately sold on the market because those folks said, you can get my Bitcoin back, but you can't get my cash if I get it out first. So those folks, we'll see how that plays out because usually, yes, they can, right, Steve?
Not only Korean, but some of them could go to jail for that's still theft, right? If you still
that's what I mean. I don't know. Yeah, I don't know how things play out there.
I know that situation. I actually erroneously sent. Oh, we're gonna keep that. Good luck. Cops coming on the way.
That's how that works. Yeah, that's yes. So yeah, and I do think that everyone keeps saying, why was I not calling a bottom? I don't call bottoms first of all, but that was the tactical bottom you want to see, a 10% bounce or recovery in a V shape, not just a limping back to the thing. So we'll see. We should be able to get a nice run up. Got to get back to 73 to be sort of out of the woods of another retest. But I'm loving what I'm seeing there. Steve, what traders are not loving is CapEx spending in the relation of $200 billion from Amazon. So, I mean.
Well, they're wrong. I'm going to tell you right now, they're wrong. And I'm going to be on Schwab today at 2:30. Those of you who want to watch 2:30 today, I'll be on Schwab Network with Nicole Pedalides, my friend. Look, the spend on AI is exactly what's happening. It's not hype. It's not a bubble. I heard I'll talk about this today on the show, but Dario Amodeo from Anthropic said, look, 6 to 12 months from now, developers are going to be a thing of the past. Now, it's a little rough and it's a little harsh, and it's not probably going to be true. It may take a little bit longer. We're going to need developers, but not the way that we use them today. They're going to write most of the code, and it's about making them more efficient, and that efficiency is going to be very prevalent in this. How much money do they spend on AWS? I can tell you it's a huge number. How much money do they spend on developers? It's a huge number, right? And what we're talking about is getting rid of that, making the people that are there more efficient. We don't need 20 developers if we just need one, making them more efficient.
And one developer running 20 agents is what we'll say.
Yeah.
Steve, in that same way, one of the things I've been railing about, as you know, is how AI is going to replace compliance and accounting, and how blockchain was going to do that. So now you have Goldman Sachs working with Anthropic. And why this catches my eye is this isn't a play on displacement of SaaS, because we'll get to that next, and I have my own thoughts there. But what it is it's a labor shift, right? That you've been talking about here for months, that people are sort of missing under the currents there, which is this is going to affect labor more than it's actually going to affect some of these software companies.
Well, the question you have to ask is, are we in a recession And we're hearing a lot of companies already talking about the recessionary side of this. So they're front running this by laying people off and saying, hey, okay, if we're going to lay them off, we got to have a narrative. Why are we doing it? Well, we see the narrative because I am going into AI, and AI is going to do this, this, and this, right? Counting, all the things we just talked about. And that's happening, right? So it's increasing the chances of a recessionary period, of which obviously we're seeing it in the stock market yesterday, where companies are like, you know what? Guess what happened in the month of January? The biggest sell-off was not from retail. It was not from institutions. It was the people in the companies selling their own stock.
Insiders, wow.
Insiders sold at the highest rate in history. So they knew what was coming down the pipe, right? It's like the Nancy Pelosi of the
right.
markets.
Yeah,
know,
I mean,
right?
that's absolutely, that's a, you always look at insider selling for sure. And what's tough is on these mega caps, it's hard because you're like, hey, they got to pay bills too. They haven't, you don't see it. When it hits a smaller company, it affects the stock right away. And you see these things on these bigger companies. We usually sort of explain them away as, hey, Elon has to eat too. But in this case, you're right. It was a predecessor to this. And to follow what you're saying, Steve, it's, Amazon spending isn't bad. It's just hitting the market at the exact wrong time when investors are de-risking anything that looks like spend now, monetize later.
The whole world has been that way since the beginning of time. Spend money now, monetize later. If you don't believe me, just ask Amazon. 16 years of losing money before it made money. Today, 1 minute of money is equal to 6 months in the beginning, right? So when I talk about companies building and creating, you have to think about what is it that they're building. Are they building the future, or are they trying to fix something right now? And these companies are building for the future. Amazon is not going, well, I'm going to spend all this money and hope it comes out. They know exactly what they're spending it on. They know why they're spending it. When Mark Zuckerberg was building WhatsApp, people are like, well, I need WhatsApp. I've already got 25. I got AOL Instant Messenger. I don't need another chat. Well, you do. You don't know what you don't know. That's what they're saying to you, right? We're going to make a better way, and you're going to play with it because I'm the one building the software. So when I hear, oh, we don't need another mousetrap, I heard this the other day. Someone on social media goes, we don't need another thing. That might be literally the dumbest thing I've ever heard, because that is literally the basis of the American psyche. We build things to make them better. We don't need another.
You always make it better, right?
We don't need a car because we have a horse. I mean, that's literally as stupid as it sounds, right? So when companies are building, they got to spend money, and they got to spend ginormous amounts of money. When the car was first being built, when Henry Ford was building the quickest way of the belt, right, to go down, he was spending ginormous amounts. He was spending as much money as every car company was worth at that time. But major investors were investing in Henry Ford and saying, yep, you know what? The assembly line is going to be good. So now those companies aren't even investing
in electricity, right? I mean, it was exactly the same.
He was right.
And
why did he go to Detroit, Michigan? Because water. It was easy to move the cars in the north. He made a very distinct decision of why he did things. These company CEOs have battalions of lawyers. They have battalions of magicians and strategists and people behind them telling them, look, we've got to invest this way. And and behind all of them are amazing visionaries of what you need. And that's exactly what you're seeing in these companies. And they're going, look, we've got to spend this money. So look, as investors, look to see where they're spending the money. What are they investing it in? What are they building it in? And they're telling you, wearables. I've been saying that for a long time. Now, okay, great. Just be careful out there, folks. Jim Cramer's right now talking about Bitcoin, so be careful.
Oh, I'm like, what's going on? I thought I started looking at Twitter. I thought something there was going. Steve, I got a headline for you, and we got to talk about it. The SaaS apocalypse. Software has been the soft underbelly this week. Market is pricing a world where AI agents compress pricing power across it. The ETF IGV is getting crushed down 23-24% this week. I'm a person who's thinking this is a little, again, common sense not sticking in, because what's going to happen is for some of these companies that are very integrated into our systems, they're going to partner again with these AI companies to make their products better. it isn't about all replacement. It's sometimes about enhancement. And I think people are missing that under all this. I think the narrative has just been, software is dead. And I do think, LegalZoom, yeah, it's dead, but is CRM going anywhere? No, because while you can do some of the components, not all of them, and they're going to roll it out with AI that's going to do it for you. And some people are lazy. They don't want to do it themselves.
I'll leave it at that. That's pretty much.
Okay. Well, okay. Yeah. Usually, I thought you were going to go the other way on me. Okay. Well, I wasn't ready for that. Steve Molina, we talked about healthcare. And again, once again, I got to say, Steve was right. You said, when I asked you when UNH got hit, is it investable now? And you said, nope, that industry isn't. I think the earnings that came across today, Molina down 28%. It's got Humana down. It's got UNH down again. Is healthcare ever going to be investable again?
Yes. In 3 years.
3 years. Okay. There. And then, Steve, the other one I had to bring up with you, how about Novo Nordisk? Nice little jump back up, 7.5%. HIMS down tremendously. You brought that up too. It was nothing more than copyright infringement, basically. FDA says they will go after them if they do not stop. So at least, hey, the CEO of Novo Nordisk was about as negative as I've seen a CEO in a while.
And
so
he was right.
Look,
the weight loss drugs are I'm a prime example of that.
Yep.
You look at these major companies and people say, well, these companies are spending an exorbitant amount of money. It's a good example of it. Exorbitant amount of money to make new products. Well, drugs are not cheap, right?
No.
Guess what's going to help make those drugs? We've seen it. Correct. And I'll tell you what's interesting, and I'm going to talk about it today on the show, is that the number of companies now, the biotech industry, that are using AI to grow that is unbelievable. OpenAI is now being used in so many companies. It's just a matter of time, and that's going to be good, right? But when you look at when the company finally makes, so I'm going to pull up Ginkgo Bioworks. Ginkgo Bioworks is the company, and I'm going to try to get, if I can, the link to everybody so everybody can see it. I'm going to put it there in front of. Hopefully you can see that now. You can click on that. You can click on that link now in the comments. Now, that's a Twitter from Ginkgo themselves. How they have partnered with OpenAI. The speed of which they have now said that, and I'll read it. We can link an autonomous lab to OpenAI's GPT-5. Now it's a new one. I'm working with the newer version 6 now, and let it run 36,000 experiments. Now let me put this in perspective. 36,000 experiments. How many doctors have they just now replaced? How many machines have they just now replaced? And said the result was a new state-of-the-art for cell-free protein synthesis that cut costs by 40% per gram of protein.
Wow.
That's just one application.
Yeah.
That's why your SaaSes, and that's why I agree with you, are gone. They're done. That's why developers are done. Right? And yes, I will tell you right now, the videos that we produce are not completely quality, right? There's mistakes that make my face look a little different. Maybe look Indian or the right. I get it. But think about 3 years ago, where AI was.
You couldn't do anything, right? Yeah, the speed.
What's AI going to do? That'd be 40% replacement, 5,000% replacement. And I had this discussion in New York not too long ago at dinner, and I'm like, I'm sorry, I get it. You have 6 doctor's degrees. I get it. You're going to be running all these. You're going to be needed, but 90% of your doctors are not going to be needed, right? Go put those doctors back where they needed, back to go taking care of me, right? So there's a shortage of doctors in the world. They're going to go back, but and I want to see more doctors educate, going back into the schools and educating new doctors, creating new doctors. That's great, right? It's not going to be where the AI robotic just sends out a pill and says, go take this and go home. That's not going to be it. They're going to give you, and they're going to find those problems faster. Efficiency. I've said this a million times. It is literally the reason AI is here. So find those companies as investors that make that happen. And that's going to be those companies that are actually producing. But also in biotech, look to see companies that already have a good pipeline, that have a good reputation with FDA, that already know how to produce these drugs. That's going to make them more efficient, and Ginkgo Bioworks being one of them. So look for that to happen. Look at CRISPR. CRISPR is not going to move even faster. I remember the day we talked about it. I was in the administration.
Yeah.
We had mapped the genome of the DNA. Look how many things it's produced. Do you know how much money was spent in the manufacturing of machines to actually map the DNA and the genes? Completely crazy amounts of money. It was about $80 million.
Wow.
$80 million to make Dolly. Okay. Today, $80 million. I mean, we don't even talk into millions, we're talking to billions. And now we're talking about trillions now. It's a big number today. It ain't a big number 20 years from now. And the number of things that are going to come out of it are exorbitant. So when they are spending the money, look to see it. Don't penalize those companies for doing that. Embrace it, because it's coming down the pipe.
Absolutely. Absolutely. Steve, got to talk about it, right? Gold and silver. Is the debasement trade back in again? I mean, I can't figure out which way this is going. Silver is looking like Bitcoin these days, and gold looks like it's headed back to 5K. What are you seeing out there?
The talking heads for gold and silver was yesterday. It was banging on Bitcoin all day. The more that they talked about Bitcoin, the more I bought. Every time Peter Schiff made a post, I just bought more Bitcoin. and it's paying off, right? But it's not a bad thing. And I like Peter, by the way. I've met him several times. A good guy. Got pictures, hugs, and everything else. He's a good guy. Okay, he's talking his book. And gold and silver is exactly what I've been saying since day one, and I agree with it. And we've got Peter Thomas on our show all the time. I love Peter as a friend, and he's a founder of this company. Okay, so let's talk about that. Gold and silver, I can't eat gold and silver. I can't eat Bitcoin. So the argument that if the world goes to hell in a handbasket, you need gold and silver. None of them are going to be worthless, or they're both worthless, right? Oh, you're not going to trade your silver for a cow. Your cow's going to be worth more than silver. Okay, so stop that nonsense. Now, do major companies hoard gold and silver? Yes. Do they hoard Bitcoin? Yes. So stop the nonsense. All right. Even the people who think the world's going to fall apart, the Ray Dalios, they may be right, still own Bitcoin. They still own gold and silver. So
they carry a combo. Yeah.
Right. And I personally asked Ray, I said, Ray, what's the percentage? He said, see, 10%. 10% what? Man, about 10% gold, 10% silver, 10% Bitcoin. Today, he's saying both of them, all three of them. So 30% of his portfolio is in Bitcoin, gold, and silver. Okay, even he's upped his numbers in Bitcoin. Okay, the guy that thinks the world's going to fall apart. So, yes, invest in Bitcoin. Yes, invest in gold, invest in silver, and put it away. Don't triple lever it. I triple levered to the downside when silver hit that was nuts. 121. Come on. Well, 20 to 120 in less than 6 months. Come on. No. So guess what? Back to earth. And now we're back to earth. Now we're going to trade because we got all these, as Warren Buffett called them, weapons of mass destruction. That's your leveraging, right? So all of those things have happened. We've gotten into it, and I agree with it. Own it. I own all of them. I own stock. I own things probably that are crazy. Guess what? I have dollars in my bank. That's ownership of something. I have yen. That's ownership of something that I can't eat if the world ends tomorrow and I'm not living in Japan. I can't eat yen, but I have it. It's an investment. So stop the nonsense. I have euros. I've got pounds. I even got Northern Irish pounds. My wife and in-laws. So those are investments, right? That's what the difference is here. Let's bring it in. I'm already excited about this. Let's do it. Come on, bring him in.
You got it. Let's get him in here. Steve Flanagan. How are you doing today, Mr. Flanagan?
Good morning, guys. Doing well. And wow, I heard a mention of an Irish pound or the punt.
The punt. That's right. Northern Irish pounds. They're still look, see the question that's been asked over the last, I'd say last 6 months. oh my God, I gotta own gold, I gotta own silver, the world's gonna end tomorrow. And you have been the voice of reason throughout this, that no, it's not. Guess what I'm buying? I'm buying the dollar. Yeah, guess what I'm buying, right? And common sense is just out the door, Steve.
Yeah, definitely, Steve. You know, I actually had to get up and I went out for a walk, enjoyed some of the beautiful sun down here, because I could not take any more of the narratives being tossed around about, you know, how the world was coming to an end yesterday. Look, hey, anybody who's investing, yeah, took a nice shot, a gut shot yesterday, as asset prices all went. But let's really put what's been going on in a nutshell to end the week. Correlations have completely broken down. When I say correlations, today, the big players, the big models, the trillion-dollar holders, computers basically keep everything in a order, a balance. So let's look. Gold and silver hit their highs at the end of January, and here we are on February 6th, and you've had these moves that have not been seen before, right? We've had a silver drop of 47%, a gold drop of 14%. And if I go to Bitcoin, because crypto is a part of people's investments, as Steve and Howard just laid out for us, if you go to the October high, Bitcoin is down 52%, with 20% of that move down this week. So what has happened? If I just look at a seesaw, the correlations on one side have completely broken. Therefore, people have to, the models have to add balance. Where is the balance? Long tech. And so tech has to get sold to maintain the balance. People are saying, oh, the dollar is going to go because the United States wants to force it down and the world is selling dollars. I don't deny that the world has increased hedging positions, but if the scenario of people selling dollar assets is so true, then why is the DXY higher? So I really want to capsulate a simple analysis here for the viewers. This is simply correlations broke and everything had to be put back into balance. I expect my own view that by today or Monday, I think that the lows are probably in place. And why would I say that? I wanted to pull my hair out yesterday. I wanted to just blow up when I see $650 billion in CapEx spending being announced. That's what? 60% higher than last year. And I hear people saying, well, you got to sell these stocks because, you know, that's just, they're never going to be able to recapture that money. And I'm like, this is back to like the invention of the telephone. What we're looking at and witnessing is all the naysayers going, oh, you can't do that. I mean, nobody's done it before. You're absolutely right. But nobody would commit that much money into a space of technology unless it is going to come to fruition. So if you're an investor, either you have confidence in what's going on in the world or get out and put your money under a pillow or under a mattress. So, you know, it was tough watching yesterday. No doubt this is a knee-jerk reaction. Mean reversions are at play right now. But I think that, you know, this was yet again a computerized market and a one-off major sell-off.
Yeah, and I mean, I bought. I mean, if I'm going to pull it in, I'm just going to talk about it right now. I mean, I bought Palantir and I bought Nvidia and I bought Amazon on the dips, and they're all up today. And you know, you're already seeing some people in Nvidia this morning jump, and they're already trying to sell it off again, thinking that they're on the right side of this trade, and they're wrong, right? This is what's happened. The common sense is going out the door. the deleveraging and the debasement trade, and every day it's a different narrative. Get it straight. They're just trying to make sense. And I think a lot of times that's exactly what's happening, Steve. When things don't make sense to people, they try to make it. I mean, I feel like it's ancient Rome and ancient Greece where they couldn't figure out why the world moves around and why the stars move around. So let's go make an Andromeda and Big Dipper up there. It's the same thing happening today. They don't really understand what's going on. So here's the new narrative. Here's what's going on. It's not hard to understand what's going on. All right. This is just common sense, and it's out the window lately. And I love it. So guess what? This is when we make our money, right, Steve? We buy when they sell. Be the ticker takers, I always say.
That's right. You know, the AI race is intensifying. Opportunities in some of these stock levels, you know, just get put on a plate to you. Watching the market react here, they're selling the dollar hard. And I think, you know, what we're missing is there is so much news out there, and people are being led astray in their focus. They're looking at, well, Bitcoin's down and Michael Saylor is going to go bust, and this is happening and that's happening, and they're just missing the focus. And I'll bring some focus. Bank of England held rates at 3.75%, a dovish hold.
Exactly.
Wow. Dovish hold out of Bank of England. Very concerned about lower inflation, they acknowledged, but very concerned about growth, but they want to wait. Bank of ECB held rates at 2%. But downside risks to inflation are now more significant, with recent numbers out of Europe, 1.7%.
Last week he was just talking about how everything's okay. This is what we're saying, Steve, that the Fed just really isn't on target because their data is so stale and old. They need, I mean, if the world is moving faster than them, maybe we don't need to hire old people to do that, right? Maybe they're having a problem.
You know, Steve, it's as I've been saying, you know, I think the political movement in the United States for youth is going to be very important. I think you're going to see more and more youth movement as people want to have fresh ideas, fresh thinking. When you look at these meetings and you see all the senators up there, you kind of go, wow. You know, and I'm not knocking, there's a tremendous amount of wisdom that the elderly offer. And I'm for it. I mean, I'm older too. I mean, I'm for it, but I'm also surrounded by machines. I'm also, yes. I'm not agnostic and against computers in front of me and screens in front of me. I mean, I got friends that are way younger than me that don't have nearly as much computer equipment, right? But what I'm saying is, if the Fed can't use these software pieces, then we have a problem, right? I mean, they need to think about that. Yeah. And, you know, I think what you're going to see, I mean, let's just fast forward. And again, as an investor, as someone who's looking and putting money in the market, you got to be peering through the windshield in front of you. You've got Fed Moran. You've got all these new people in there starting to talk lower rates. And you've got a new governor coming on saying, hey, there's a lot more tools than, you know, that the Fed can use, but also wants to pull the Fed back. Why are we so on the edge of our seat at every Fed meeting and every word?
And we shouldn't be. We should not be.
Not with $650 billion going into CapEx spending. That's where we should be looking at the growth ahead.
30 seconds ago, Fed's Bostic says he thought he was doing the right thing with Fed trading rules. Then why are you a Fed governor? I mean, you shouldn't be a governor if you don't know your own damn rules. The reason you're the governor is because you are the best person there, right? So I don't know that he's digging himself a hole. I don't know. Yeah, I don't know. All right, here we go. We got about 5 seconds here to the open. I've got the queue sitting here ready to go. Let's see what the first trade, the basement trade is on today. Yep. We're slipping below the 600 handle here. 67,000 there on Bitcoin, pretty much quiet. Nvidia up 2%. Palantir about 3% here. I expect us to go higher. I think once this first bit of selling, these are retailers that couldn't get out before the pre-market. trying to take some profit. I think they're being silly because I think institutions are probably 67.2 now, 67.3 now on Bitcoin. We're starting to see some buyers. 67.4 now on Bitcoin. Moving fast here now. Amazon down about 8%. I am going to buy some more Amazon here. I like this. I think it's Amazon's smart move here for me. There you go, 67.5 now on Bitcoin.
Opportunities, Steve. These are, I think the market is misdirected right now. The ferocity of the move we have to respect. So yeah, if you see a pop, there's going to be a lot of people saying, why didn't I get out on Monday when I wanted to? And there's going to be a lot of selling on the up move.
And they'll probably just chase it again, like FOMO. And we don't chase here. We don't do that. And that 67.6 now on Bitcoin. It's going higher now. Palantir. Yeah, I bought some Amazon here, folks, for those of you. Yeah. So I like this dip on Amazon. Yep. No, I don't take my with the buy or sell. We don't do that here. But I do like this Amazon under 200 was kind of nice. So right at the 200 handle, I do like this. If you look at a daily chart on Amazon, I mean, this is giving it all back. I love it, 250. So I think we are probably going to get a nice bounce. I'm buying up starter position. He and I talked about this, Steve, yesterday. What you dip your toe in, right, Steve?
That's right. You got to start small. There is, with absolute incredibly rare exception, do you go all in. You always start off small and build a position, because once you jump into the pool, you know very well how the water feels. Hey, it's not so bad after all. When I dipped my toe, it felt cold, but now that I'm in, it's pretty good. And that's when you begin to build. Now you're watching it because you've got, a stake in the game. So this is going to be a very interesting day, a very interesting weekend. Again, this is a
Why do you say interesting weekend? What should we be looking for on the weekend here?
Two things. One, Iran and U.S. I mean, that's huge. I mean, and why do I say it's huge? Okay, just call up any page and look at the armada that's sitting off of the Iranian coast right now. This is one of these moments where they either agree or there will be action.
One of the things the Iranians are saying, they want to continue to enrich their uranium.
Steve, I think at this point you have to say they can't be trusted on enriching uranium and not using it in a nuclear bomb. The second part of that is if Iran gets a nuclear bomb, then Saudi Arabia is going to want a nuclear bomb. The Shiites and the Sunnis, what are we going to look at? 1,000 years of history here?
Yeah.
So it's just not going to happen. I think, people say, well, the United States can't force a regime change. Right.
Yeah, we can.
We can.
We have. Look at Venezuela.
Yeah. We would like to leave the government in place. I just think that you can't have a religious leader leading a country calling for the extinction of a neighbor. It's just not going to work. And this is a president who has got peace at the forefront of his agenda. And why is that important? And that's why I say the weekend is very important, because peace allows the financial markets and all of this vision that we're looking at and that we've just talked about ahead to come to fruition. So that's the one big thing over the weekend. But the second biggest one, and even perhaps more so, is elections in Japan. And I think what everybody's calling Sane Takaichi is the president, the prime minister of Japan. She called for snap elections on Sunday, and we're calling it Sananomics, very much like Abenomics. And what does that mean? It means if she wins and gains a majority, expect expansionary fiscal policy, proactive government spending, and a dovish pressure on the Bank of Japan on raising rates. Abenomics, which everybody knew about Japan, got them out of 20 plus years of deflation, was bold stimulus and loose monetary policy. So the lower house is where all the decision making happens. And let's put some numbers out there. You have to have 233 seats of the 465 for a majority. It's expected in the polls that the LDP plus their coalition partner will get over 300 seats. If they hit 310, they then get a supermajority. So that's what we want to watch for. Simple numbers. You'll have that news out sometime on Sunday, definitely before markets open on Monday. So that's what you want to watch. And why I'm saying this is because Japan is an integral part in this whole economic growth that we're seeing. They're doing well. It's probably my second best investment outside of the United States. That's where I would like to be.
And let's look at that, Steve, real quickly. Which party will win a majority? According to Kalshi, will any party win a majority in the Japanese snap election? 89% says yes. How many seats will LDP win? The bigger this, it's really kind of a toss-up here, I think. But the question mark is about which parties will gain seats in the Ishin, which I think will 47% and gain 2 seats. But will the CRA win more than 172 seats? And the answer is no. So I think you're right. I think I think you're right. The JIP might win it, and Sane, yeah.
That would be interesting, Steve, because you'll get very pro-growth policies out of Japan. I do believe you're going to see a very close to a supermajority. That's the way I'm feeling. Her polling is very strong. Obviously, first female prime minister in Japan. And she polls very well. And the people really seem to be behind her because Japan is moving out. Remember, we're talking 25 years.
Right.
I mean, Japan's heyday was in the 80s, right? When they were buying everything.
Cars.
So you've got entire generations of Japanese that are now like, finally, somebody's doing something. I think she could end up with a supermajority with the coalition partner, and that would be huge. I think that would be very pro-growth. I think United States and Japan are extremely close. She runs very similar type of ideology, meaning Japan first policies.
Yeah.
So that's where I'm watching. I think you could have, we could get a double bang here with maybe a peaceful solution in Iran.
Yeah.
And a positive Japanese outcome. We could be looking at Monday a whole new world, given the negatives we're ending the week on.
A whole new world because Japan changed.
It's a big piece, Stephen. Okay, I'll throw in, you got a U.S.-India agreement this week, almost kind of has gone unnoticed. And I thought that was going to be one of the biggest pieces of the puzzle. Right. I've been talking about that since probably September last year. But it's been caught up with everything else going on. So I am looking at Europe very closely. German industrial production was down 1.9%. And, with all the noise pollution going on with silver and Bitcoin, I want to make sure we understand that just 2 weeks ago, the Chancellor Merz, the leading politician, the guy who's running the country, came out at Davos and said Europe is a failure. And Germany intends to begin to change course and lead us out. So as an investing point of view, suddenly I have looked very negatively on Europe. I'm beginning to watch it carefully now.
Are you liking Europe now here, Steve?
I'm not long Europe, and I don't want to be long Europe because I still think that the bureaucracy, I need to see changes. But I am watching it carefully. And I will say another thing that went into all the noise pollution and people missed was a number of the European Central Bank members talked about monitoring the exchange rate. Whoa,
Yeah,
boy.
that is interesting. Yeah.
You peaked over 120. A stronger European exchange rate, meaning that euro dollar moves up to 120, is going to really hinder their exports to the United States. So
what would they do with that the higher euro right now? Would they spend more? They might not come to the United States because they're pissed off the U.S., right?
Well, they are fully invested. Let's say, when people say Europe is selling, Europe has hedged themselves in the dollar, but their investments, I mean, the U.S. markets have been, up until this week on fire, right? Coming off of all-time highs. So a stronger euro does not change anything. It just means that the export sector of Europe is going to have more difficulty in selling its products overseas. And that's a drag on their economy. Oh, and by the way, their economy is projected to be 1.4% growth for the next 2 years.
Wow.
So a stronger euro would weaken that situation. And I don't understand how you can have, inflation now at target, under target, and have growth of 1.4% that you're projecting for 2 years, and nobody's saying that's unacceptable.
Right.
Not if the United States can put a growth of 5% on. So this is where I'm looking through the window, and I'm not looking in my rearview mirror. I've thrown that out because
I love it, because I think that's what the Fed's in. Look at the rearview mirror. Let's look at this right now. Silver up 75.82 now. Now it's up 6.75%. Amazon still 202. Got as high as 204. Something there. Bitcoin is 68,000. Right back up, Steve.
In about 5 years' time, maybe more, somebody's going to write an awfully good book on what just happened and transpired. And to the viewers, understand, Steve and I have been at this for a long time. And I've gone through, sitting front row desk, through a number of major calamities in the world. And I'm going to tell you that what we've just witnessed this week gets on the top 10 list.
Oh,
so,
okay. Yeah, I agree.
Understand that this was, and so when you listen to all the voices out there telling you, this and that, you got to step back. You must have your own opinion. Listen to everything, but have your own opinion. Is the world coming apart? Well, I don't know. Peace deals all over, trade deals all over. I mean, let's go outside of the U.S. Look at what India and Europe just agreed upon. I mean, it's massive. Do we get peace in the Ukraine and Russia? Well, they've certainly met twice, the Trilateral Commission, and they're all talking major positives coming. So right. China and the U.S., well, I don't see any more of the, headbutting going on. There's a lot of positives out there in the world, but we all want to focus on the negatives. Somebody has been caught in the metals market, or some people, or a group, because of the rapid rise up. And now it's come back down, and somebody engineered a good move down so they could cover positions.
No fat fingering?
Do I have facts on that? Zip.
No. Fat fingering. Was there a fat finger coming out of this?
No, Steve, I'm not going to go down that. I mean, I've seen fat fingers, in markets over the years, but no, I don't think so.
For those of you who don't know what I mean by fat fingering, it means when using the buying, selling machines, the DOS traders or whatever you're using, that maybe they added a zero to that number that they were trades and made mistakes. So you don't think there were any mistakes being made in this last few days?
In the last few days, Steve, no. The last few days, you hit the breaking point and people cried uncle.
Okay. I agree with that. There were a few places where people sent too much Bitcoin or small things, but it wasn't like we bought 5 million shares of something. They actually meant to buy 500 shares of something.
Yeah, and I've been forefront in watching those events happen over the many 30, 40 years that I've traded. I've seen those, and I always say when you see a fat finger, which is somebody said I want to sell 5 and hit 5 million, there's a lot of checks and balances against that now. Trust me, those things.
I love the story of the guy who slept on his machine.
Yeah. Oh boy, Steve. Yes. But when you see those type of moves, everybody headlines, it was a fat finger. Somebody mistakenly sold. The question I always ask, who bought?
Who bought? Yeah, somebody had to buy.
Somebody had to buy.
Somebody's on the other side of that trade. Yeah.
We used to call them, they're hunter-killer models that are out there in the marketplace, automated bots. And when they see standard deviations that have not happened before, like this week, they come in on the other side. And makes sense, because unless the world is coming apart, then these moves are emotional outbursts or margin calls, and they go one way.
Yeah.
And these are opportunities, and you must keep a level head. And that's why I'm telling you, yesterday, I literally shut everything off and stopped. Like after 2 hours of trading, and I said, you know what? I'm done. I'm not touching anything, and I can't hear this anymore because I know it's all wrong.
NVIDIA is now up 5% here on the day here, Steve. I thought NVIDIA was done. I thought that the Chinese were going to screw them over, and they're done for the world. I mean, this is crazy. This is why that's why you buy. We
talked about that Wednesday, Steve. I think you actually were looking very positively at that, taking advantage.
I'm still long. I ain't stopping. Yeah. No. Look at this. So, NVIDIA now up 5% here, and Palantir up 4%, and Amazon now it's back to 204. So, folks, I mean, this is what you do, right? We take advantage of these nonsensical moves, and we take it to the bank.
And the correlations are coming back on. So what is that? Look at the dollar index. Dollar index has already moved down to 97.59. When I started, it was at 97.75. I was going to talk about, are we going to see a higher dollar index? I do think that we will. But right now, the correlations are all resuming, because people are saying, if NVIDIA is up 5%, well, for the last 3 weeks, 4 weeks, I sell the dollar index. And so that's what's beginning to happen. And this is what you need to look at. The other point I would say about these moves, understand when they happen. The whole silver collapse happened in pre-market trading.
Yep, it did. Mm-hmm.
And that's very important. It doesn't mean that you go long, because you would have gotten crushed in silver had you done that. But what it means is that the origin of the move happened before the full market could trade. And that means you've got to say, I'm suspicious. And then you look for your opportunities.
We've already pulled $2 out of Amazon here in just the last minute here.
I mean, what it means is all the models, all the mean reversions. Remember, these are computer models. They're saying, and understand the way they work. If I say sell 2 at 10, and I only sell 1, and the next price comes back 8, I go, oh, now I have to sell 5. And I only sell 1, and the next price comes back at 6, I say, now I got to sell 50. And that's the way it spirals. And then pretty soon it just backs up a dump truck and dumps it out, because that's what the computer model says based on the price input. And then when it comes back 6, 7, 8, and it starts going the other direction, the computer model has to reverse. The funny thing, I always had something on my desk from an economist headline back in the late 80s, and it's markets are in perpetual motion.
They are, yeah.
And so eventually something hits a point and you begin to see the moves that Steve's highlighting.
I'm getting quiet obviously because I'm liking this this move here. Eli Lilly up 3% yesterday. Everybody's thinking the world was going to die because of Eli Lilly, and all of a sudden now it's back. It's crazy. Yeah. Yeah. Here comes Amazon now being Scotiabank says still outperform. I mean, it's still, they all like it. So I'm still here with them. Yeah.
Yeah. I mean, look at Google and Amazon's earnings. Were they bad?
Nope.
I mean, and you know, this goes a lot to some comments that you've recently heard in the marketplaces. How come when a company comes out with earnings that are really fantastic, everybody says, yeah, but if you look at line 7, sentence 3, and everybody starts selling? Or is it that everybody started to buy going in and somebody said, all the retail guys are long, so I'll start selling after the market close in the aftermarket trading and bust everybody out? Is it, maybe it's that simple?
We got a question here for you, Steve. Is it possible a fund blew up yesterday?
Absolutely.
No, 100%. We just don't know who it is yet. Yeah. And I don't think it's one. I think it's several funds.
You know, I think had silver been left at $120 and maybe kept going, because you'd have just the opposite side move from a downside swing that we can all see. You were getting an upside swing in silver as people said, I have to cover my short. A lot of rumors were out there back then about people being short.
Yeah.
Anytime something moves in a rapid fashion, a price maker is buying on a move down. A price maker is getting long, getting longer, getting longer, getting longer. Eventually, their models hit a break point where they have to dump. And that's why you get these straight bars that go down. Is it possible somebody got hurt? Yes, definitely.
No, I think somebody did. I think I mean, the old adage, what Warren Buffett always says, right? It's when you get to find out who's swimming naked, right?
Yeah. And when are we going to find that out? Well, nobody's gone bankrupt, although over the weekend you may hear about.
We're going to hear about it over the weekend, I think.
You'll hear about drawdowns and things at the, you know, the Fed window, who had to borrow. But next quarter results, that's when you're going to find out.
Nvidia's up $10 here, folks. I might do what Steve always tells everybody to do, right? Which is what? Take some off.
Take the money and run. Woo.
Yeah, I'm going to take some shares off here. Not all of them. Probably half here, which is what I'm doing. And I'm doing that right now, actually.
And why is that strategy successful in the long term? Because show me the last time a NVIDIA moved like that. How long ago did that happen? It happens very rarely. So when the market is just giving you something, take it.
I just did. I took half off there, Steve. I am looking at Palantir here, but I'm very interested in this Amazon move. I like this Amazon move a lot. I might also, and of course, I don't want to miss any upside on Nvidia too as well. But I also, you know, I was a little heavy on Nvidia there because I knew that was a nonsensical move. That gives me more money to play with for somewhere else. Always have what? Powder. Always have powder ready to go.
Keep your powder dry. That's what we always would say on the desk. When you're uncertain and unsure, keep your powder dry, because eventually an opportunity shows right up on your plate. Keep the amount of things that you watch very small. If it's stock trading that you do, or currency trading, or commodity trading, don't look at everything. Have a macro view. Be aware of where things are trading. But when you're putting your money at risk, do it with things that you really know about and learn about and understand exactly why they move the way they move.
Yeah, and I'm kind of mad at myself because I wanted to buy Robinhood yesterday on that dip. I mean, Robinhood getting down. I mean, I believe it was under. I think it was under 70 yesterday, wasn't it? 70, yeah, 69 something. Yeah, I liked it down there. I didn't get a chance. You can see the buy signal that I put in there yesterday, and I didn't do it for myself because I ended up buying other things, but. Man, what a beautiful day. The Dow's up 700, Nasdaq's up 260. Soybeans are up another 1% here. You know, beans are up. The farmers looking pretty good now that China is saying they're going to buy another 8 million bushels.
again, Steve, ever since the president of China and the president of the U.S. met,
Yeah.
a lot more agreements than disagreements are coming out. And
Yeah.
that is a massive positive to the world trading system. There's plenty of room for both of us.
Now, Steve, what do you think about the dollar here at 97.58? Are you still there?
Yeah, 97.15 was last week's close, so I'm kind of hoping it dips a little bit more. And I want to, get. I have long dollars right now. I'm long dollars against Canada, even though Canada unemployment was a little bit better, and I've lost a bit on that trade. I still like the dollar versus Canada. I like the dollar versus the yen. I think if we see Takaichi win a majority, I think dollar yen could actually trade up to the 160 level, which I would exit anything above 159. But I do like the dollar there. I have a small position in short euros because I do think that Europe, again, after the German IP data today was minus 1.9%, they're still in the thick of the woods. And, with inflation decreasing and suddenly the ECB concerned on an exchange rate, I like the short euro. But overall, I do expect everybody back in the trade. So I do think we could see a low of, say, 97.30. And I have a tight stop. If the dollar index breaks today, 97.10, I would be out of my trade because that sets up a lower weekly close.
Love it. I love it. All right. We are getting close to the top of the hour here. Quick run through 68,000 now on Bitcoin as the selling yesterday is gone. It's done now. Looks like we're in the linear regression, so be careful. There'll be some machines that will be looking at this here and going, okay, I got time to sell, but I don't think that's the case. I am still long Nvidia. We took a little bit of profit of it when it was up $10. So here it is at 9. Could continue to run back up there. Oil, another question mark around it. I think oil might have started to balance out a wee bit. I do like Apple here. I liked Apple in this bounce here. Apple did not take a beating yesterday. It was one of the few that were in the green yesterday. So that should tell you a lot. It weathered the storm.
Yeah, well, they still have a huge war chest of cash, so
they do. And look, I think that they're doing the right thing when they're looking at AI. They're looking to partner with OpenAI and Gemini and other companies. So I think they're doing the right thing there. All right, Steve, it's 10 o'clock here at the top of the hour. We'll let you go. And for those of you watching us here at Quasar Markets, thanks for watching. And got a couple good shows today for you. So I'm looking forward to that too as well. All right, for all of us at Quasar Markets, we'll see you tomorrow or Monday.